So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. And I hope everybody's had a great break. So, 25th of November 2018, no trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. I wish more was going on because, we haven't moved that much in terms of the chart location. So, not that much super new to talk about, but we can go through it. It's going to be interesting as we go into the last week of the month. I mean, we got a lot of headline risk. We've got, Russia, OPEC, Brexit, Italy, China. Draghi's going to speak. Carney's going to speak. The RBNZ is going to be on deck this week. We've got FOMC, a lot of FOMC speakers. We've got those banks stress tests out of the UK. We've got GDP out. We've got Powell speaking. There's an awful lot of stuff. We got those Fed minutes coming out too. So there's an awful lot of event risk across the board, and all of this is leading to the G20 meetings. So right, the big issue is what's going to come out of the G20. I doubt it's going to be a massive deal, but point is it could easily be market moving, right? Now, if we're looking at the charts in terms of where we were and what we were focused on, the damage has been done. If you look at some of these tech names, right, as we'll be discussing, 40% down on Netflix, almost 30% down on FANG, over 30% down on Amazon, Apple approaching that 30% down, right? So it's not pretty. And in terms of the markets, as long as we hold below those pivotal levels, pressure is really going to be on, right? So 2,700 on the ES, 25,000 on the Dow, 1,600 on the Russell, and 7,000 on the Nasdaq. Now you see that it looks like we're trying to move down an extension after we had these retracements and go a little bit lower, even if we're going to ultimately bounce a little bit. So that's going to be the focus of this week. But again, the market is holding fairly heavy. I think the risk clearly is of some kind of a bounce. And I think everybody's going to be hedging their bets. Everybody's just saying, okay, well, we've got this Santa Claus rally that's coming up. I think even though the seasonal, you have to keep the seasonals in mind, they don't have to play out, right? They don't have to play out. So here, if we're looking at the SPX, and it's a similar situation across the board, is as long as we're stuck here inside the yearly range, we could see a lot of chop. And you could see how heavy this is trading into these lows. So our base case still remains that we have to go back and test these lows. Now, keep in mind that on some kind of positive, let's assume we bounce from here, on some kind of positive G20 kind of news, we could easily bounce off these lows, right? Let's make it green. We could easily bounce something like 6-7%, and we still would have to take out this huge resistance, right? So don't be surprised if you see a lot of choppy action here, and we still do not discount the fact that we could easily get this kind of bounce, especially on headlines. But we really think that unless it's on super good news in terms of G20 or something, any kind of bounce, you could look at a 5-6% move back into these highs, but this should cap it unless you've got really, really good news, something really changing. The path of least resistance still remains to retest these lows, and if things get ugly, you could see some kind of acceleration, right? And that's a very similar chart across the board as we discussed and we've been looking at, right? The Nasdaq is very, very similar in the way this is trading. And if this is, let's see if it loads, right? And this is still 123 extension here is coming towards these 6300s. And probably if you want to get a feel for are we going to get that bounce, is you want to look at the Russell, right? The Russell, as we've discussed in the past, a lot of our open shorts or starting shorts this year were all on the Russell. And keep an eye on what the Russell does, right? Because the Russell, once it lost that 16 1600 level, it's been accelerating and it's just not getting the kind of bounce the others are getting, especially with that rotation out of the NASDAQ into the YM. This is holding very heavy. So again, if this can bounce early on in the week, then watch the others. But even if you look at this, right, it could easily bounce off these, it could bounce almost 7% and still hold some kind of a lower high, right, on this bounce. So we'll have to see. We still think these 1400s are going to come into play, but you know, that's what we would be focusing on. But again, a lot of those tech names really look ugly, right? And we've had a lot of those moves on some of the other single names we were looking, and now we're just waiting to see if Apple can catch up. Keep in mind, a lot of people are still thinking this is going to bounce hard. And there is absolutely no reason why Apple shouldn't bounce hard. But remember, if the economic cycle is peaked and we're going to start to get worse data and things get ugly across the board, there is a lot of room this has to run to the downside. We've got our second target is done, and this was really our primary move, right? We're looking for this to come back down to the 195. And then we're looking for it to come back into the 175, 169. Now, this is done here. Now, the healthy move here would be to get some kind of a bounce. But remember, in terms of open gaps, there are a gazillion gaps that are still open. And ultimately, we would not be surprised to see this trading much lower. But again, this is where it should bounce if this is going to be semi-healthy. You see here, we've made our way back into the 100 on the weekly. If it doesn't catch a bounce soon, this could flush and look ugly, okay? Now, going back into some of our other core charts, which we like to focus on, or we like to look at in the Sunday update. So they're basically the 5 major markets, right? So we look at the ES, we look at crude, we look at gold, we look at bonds. And so what? Yes, bonds, crude, gold, and the dollar, right? So if we look at crude here, as we warned, this is just, it's very hard to try and catch these moves. And this could easily be in this kind of phase. Now, our shorts into the 100 there were done into the 55. Now, we had no idea those were going to happen so quickly. Now, right here, we said if it's going to bounce, this whole area is an interesting place to try and play for a bounce. And if you look at it on the shorter time frames, on the daily, we actually got a chance to, let's just even get on the 1 hour. We even got a chance to try and play for that bounce, right? Once we got into the 55.29, right? You see how we came into it, we started to base, and then there we go, right? We got a chance to try and get long here. Clearly didn't work. At that point, there's no edge to try and stay stubborn, right? Because this just continues to flush. So you'd rather be a little bit late on the move than trying to catch something which is liquidating hardcore like this, because there's just very little edge. So going into the week here, into crude, you have to be aware that, you know, when things get funky, it could get very ugly. So right here, in terms of all those people writing in saying, you know, when are we looking to get long, or is there a long? Unless this stabilizes back above the 200 here on the weekly, there's very little reason to get long unless we get much lower, and we'll review this week. But right now, it's just let it do what it needs to do. Okay, there's really not an awful lot of edge. In terms of gold, what's happening here on gold? And again, this is what we said. We're going to stick to what we said, is we felt there was very little edge in trying to, we call this the sucker trade, right? Trying to buy longs into this brick wall. We said, let's wait, let's see if it gets back into the 1200. That's where we'll be waiting for it, understanding that there's a lot of room for this to try and flush, but there's no edge in trying to get long here. Wait, let it come to you, right? And we got that nice move back into the 1200, with the market turning, starting to stabilize here, and then we got the little bounce. So again, as long as we trade inside, you can call it 1240. Here we have it up as 38s into 1240s and 1200. Do not be surprised by velocity of move inside range. To us, anything here means absolutely nothing. Above, we expect it to accelerate back into the 1300 very aggressively. Below, it could try and flush back below the 1100. But we have absolutely no interest in trying to get short. We have a lot of interest in trying to get long on any flushes. But again, here, let's see what happens. Again, there's just not a lot. It's just still stuck here, just not moving. And ZBs, as we said, if it can't hold below the 138s, we expect this to try and rotate higher. This could possibly catch a squeeze all the way up at the 145s. But you see here, it's kind of stalling. Again, hard to read too much into it into the holiday week, so we just have to go back and see how we trade this week. Essentially, we'd go back to exactly what we said last Sunday, because essentially this is just a little bit of a waste of a week. So we'll have to see what happens. But below these 138s, very heavy. Above the 145s, very bullish. And as long as we hover here, this is a choppy range. But you see, we've got these choppy ranges in the same way you've got that in the euro, you've got that in the DXY, you've got that in gold. So it's the same chart across the board, right? Essentially, it's just the same chart across the board, and the market is waiting for direction. As we said, most likely, if that direction was going to come, we'd expect it to come through this week and after we get through that G20 mini. But if you look at Asian markets, Shanghai comp still not looking pretty at all. As we've been discussing for ages, you got to pay attention to this, right? J&K. High yield is not painting a pretty picture. This looks very, very ugly. I mean, even if you get some kind of relief and it stabilizes, we still expect this to play out for some kind of an ultimate flush. But again, it's not painting a very, very pretty picture. And if we look at the USD, well, essentially, we've just gone nowhere, right? It's just stuck here. So refer back to all the updates. We've done a lot of detailed videos on the DXY. We just have to be patient. Just not an awful lot is going on. And the same chart, really, if you flip it around and you go back on the euro, well, there you go, right? It's about that weekly close. And that's what everybody's going to look at. Go back. Are we basing here for that rip back into the 118.50, 118s, coming into bullish seasonals for euro, or are we going to take out these lows and the flush is going to attract new sellers at lows? That's all that really matters, right? Is can it attract new sellers at lows, or are these just flushes and there's just a constant bid below? What the chart would be indicating so far is that euro is unable to attract new sellers below the 113. And as long as that remains the case, and especially as we're going into bullish seasonals for euro, the base case would be that this is going to try and get a little bit of Momo to the upside. Again, it's hard after last week. It's hard to read too much into last week. So we just have to be very, very patient and understand that this last week of the month has got a lot of things in play, a lot of headline risk, but things should be much clearer once we finish off this week. We get over with the G20, and again, we can look at more things, and we'll focus on all our seasonal plays or our swings that we usually put on in December through into January. Okay, guys, have an awesome one. Thank you for liking, thank you for sharing, and see you around. Let's hope it's a good one. Oh, by the way, I forgot. The other interesting thing is keep an eye on VIX, right? Because it's really interesting, right? The market seems to, and again, it's hard because it was the last week, but the market seems to be pointing to no real fear. So that's also another thing we've discussed in detail in the past week. That's another thing that leads us to believe that we still need to get some kind of a flush. We still need to test those yearly lows. And if we get that panic, then And only then we could be looking at reversing and trying to place some longs into the coming weeks, into the end of the year. But unless we get that panic flush, we still think the path of least resistance is more panic. Okay? Have an awesome one. Take care, guys. Bye-bye.